Welcome to Realcast, the weekly roundup of the real asset markets. I'm joined this week by Paul Strome and Nicole Dines. Nicole, what's your pick of the week?
At the beginning of the year, we talked about the sectors that have done particularly well in 2021 and look set to continue doing well this year. And one of them is certainly residential in general. Savills had a report out very recently saying that 28 out of the 30 top cities residential will do extremely well with increases of up to 2 digits in this year. But one sector in resi that did particularly well is build to rent, and we've seen recently 2 deals that show the direction of travel. Mark, which used to be formerly known as Mayor Bergman, has entered the UK build to rent market for the first time. He teamed up with developer Hub to acquire a site in Birmingham in the Snow Hill district. Birmingham is regarded by them as one of the sort of fast growing cities in the UK, so they're betting on build to rent there. And the Netherlands, Greystar, which obviously is a build-to-rent housing specialist, has signed an agreement with the Dutch developer Stebro for the development of 406 private sector rental flats in Levels, which is a new development in The Hague. Again, The Hague is seen as a fast-growing city, and demand for build-to-rent is very high. So that's one sector that's done well. The other sector, obviously, did extremely well in 2021 and will continue to do so, is logistics. And we've seen this week Cheyne Capital has made its debut in the French logistics sectors by financing a 117,000 square meter logistics platform located in a good area close to the motorways and close to the Ile-de-France. So Cheyne Capital obviously believes that, which already has big logistics investment, is now betting on France. And just across the Alps in Italy, Kryalos, which is Blackstone's long-standing partner in Italy, is betting on last mile logistics. Kryalos was one of the very first companies to believe in that particular segment and has been investing heavily, and now it's adding 140,000 square meters to its big portfolio in Italy. And what's interesting is that for the first time, it's not just in the north and center of the city around Milan and Turin and the obvious places, but it's actually invested near Naples as well. So it's very much a countrywide move. And but one sector that has not done well, as we know, in 2020 and 2021, but it's obviously people believe it will do well now that the pandemic's nearly over and things are reopening, is hospitality. And we've seen evidence of that with 2 deals recently in Italy. Hilton is opening a hotel in Florence called the Anglo-American Hotel, which was one of the very first to open in 1792 in the city. And now it's been abandoned for a while. Now it's being completely restructured and reopened. And Hilton has already opened 3 hotels in 2021 towards the end of last year, 1 in Rome and 2 in Sardinia, obviously believing not just in city tourism, but in leisure tourism as well. And in Sardinia, 6th Street, which is the global investment firm, has just made its debut in the hospitality sector in Italy by buying a 5-star resort on the famous Emerald Coast in Sardinia called Le Palme, 92 rooms with a big private beach. And it's interesting because 6th Street has a big presence in Italy in all sectors, from offices to residential, but this is the first time that it's entered the hospitality sector, and it's also said it wants to do more. So it's a positive indication. It's entered Italy, but in December 2021, 6th Street had entered the Spanish market with a bang, buying a portfolio of 5 hotels. So clearly it believes in the future of hospitality.
Yeah, it's interesting that discussion around hospitality, and particularly the business versus leisure hotel side. But yeah, very interesting to see a lot of those deals in leisure beginning to come through now. Paul, what have you been following?
The industry's serious concerns about some of the negative trends in property of late, some long-term, some COVID-related, are in contrast to figures just out from CBRE that show that Europe's real estate investment markets attracted record investment of 359 billion euros in 2021. An all-time high. The total was 25% more than that of 2020 and 8% more than in 2019, which was the previous record year. Almost a third of the total was attributable to Germany at 110 billion. But it wasn't the only country where there was an increase. Most did. The UK, 49%, Ireland, 54%, Spain, 33%, the Nordic region collectively 44% up. But volumes were down in several countries. France dropped 9%. Portugal 21%, and the Netherlands 10%. Large platform and portfolio deals, of course, accounted for much of the increases. The office market remains the largest sector in Europe, with investment volumes reaching 111 billion in 2021, which is 16% more than in 2020. Industrial and logistics investment saw volumes up 48% to 62 billion. The firm said that although retail investment is still under pressure, volumes fell 11% to 35.2 billion in 2021. Some markets showed increases, including the UK, Nordics and CEE. EMEA Capital Markets Managing Director Chris Brett points out that investors are once again starting to see value in retail. We're also seeing multifamily housing challenging the office market as the largest investment sector. And separately, there have been some other moves in multifamily housing too this week. Nicole mentioned Mark. Its strategy is to expand into UK's lifestyle cities with projects in London, Leeds, Maidenhead and Edinburgh. Further afield, rental housing specialist Greystar and Ivanhoe Cambridge have formed a new joint venture to pursue multifamily real estate opportunities in Chile. The partnership will be initiated in the capital, Santiago. The company said that their partnership is the first global institutional capital investment in multifamily real estate in Chile. The deal expands a collaboration that already operates in a number of countries. Greystar and Ivanhoe Cambridge had previously partnered in North America and other international locations. Also on multifamily, Commerz Real has acquired a portfolio of 4 residential projects in a forward funding deal with developer Quarterback Immobilien. The projects are located in Dresden, Jena and Leipzig, which are in what Commerz Real refers to as swarm cities. Google suggests the term means a link with zombies, but Commerz Real points to market research institute Empirica, which coined the term to reflect cities where large influxes of young people markedly increase the birth rate. In another interesting development, a number of green bonds have been launched in the last week, including Berlin Hype, which issued the first green bond under its new taxonomy-aligned green bond framework and received orders worth over $1 billion from 88 investors. P3 Group has also just issued a 1 billion bond in line with its green financing framework.
Yeah, it's really interesting, I think, to see some of those trends coming through. I noticed that Christoph Schumacher, Global Head of Real Assets and Private Markets at Manulife Investment Management, was posting quite a lot on LinkedIn around ESG, talking about the partnership with Wilder Climate Solution, which I think is an interesting initiative there, as well as announcing that 55 West Monroe had been awarded a 1-star Fitwel certification. And it was interesting. I also had an interview with Lisette Van Doorn, CEO of ULI Europe, talking about the challenges around ESG and carbon neutrality and the need for the industry and key players to work more closely together to help meet those challenges. But that there was definitely a consensus that it was time now for real action on climate change. And this was also mirrored in the announcement, I thought, from MIPIM that former French President François Hollande will develop the keynote address and focus on how the industry can tackle climate change. We'll also include a focus on ESG and impact as part of the full program of events that we'll be running in Cannes at our new club MIPIM as the International Investors Lounge comes to MIPIM for the first time. And it's been really interesting just to see in our conversations with industry players that there's now a much more positive focus on MIPIM than even 2 weeks ago, maybe helped perhaps by some of those announcements and also the lifting of restrictions here in the UK and the lifting of travel restrictions as well in France. I think a real shift there, which is encouraging. Thank you, Paul. Thank you, Nicole. Thank you for joining us and look forward to seeing you next week for our regular roundup of the real asset markets.